Stocks trade ranged in a holiday week with a few big cues to provide direction. Utilities and consumer discretionaries lead gains, IT drags.
Canfin Homes will get a new CEO before the fiscal end. Parent Canara Bank CEO tells CNBC-TV18. He also adds that home financier won't raise capital this fiscal, even as Canara Bank has raised a heady 1 lakh crore from its deposit drive.
Reliance Industries completes 20 years of double-digit growth since 2002 when Mukesh Ambani took over as chairman after successful forays into telecom and retail. It now eyes the spot of the world's lowest-cost producer of solar energy and green hydrogen.
There are a bunch of stocks in news with thinning news flow. Stocks in the news see significant swings. India Pesticides jumps on an environment clearance. RVNL gains on an order win, while Jubilant Pharmova's comments to analysts prop the stock.
Hello and welcome to Halftime Report. I'm Sonal Bhutra and with me are Ekta Batra and Manglam Malu. Hi guys, good afternoon. Well, there has been a swift recovery in last couple of minutes. Right now, Nifty is at the day's high. The high for the day is 18,151. So yes, closer to those levels, and it's a 70-point recovery from the lows as well. PSU Banking Index continues its stellar up move. So that index is up 2%, but really remains to be seen whether we'll continue this rally today as well or not. And tomorrow is the big expiry day, the monthly expiry that is.
Yes, good afternoon. It is recovering from the lows and selling off at highs. That's been the order of the day so far. And it's a Wednesday afternoon ahead of the holiday weekend, so to say, thinning trade volumes, etc. And the market's behaving no different. It's just absolutely flat, just shuffling between red and green. The mid-caps outperforming. That's the only solace that the bulls will get.
Yes, absolutely, Manglam, as well as Sonal. Hi, hello, and welcome to the show. But absolutely, you said it's a holiday weekend. The markets are already in holiday mode. So, it's already taking place at this point in time. Maybe just an important cue to watch out for is what's taking place with Brent crude, because that one is at around 3.5 week highs. So let's see how that one trends at around $84 per barrel. Separately, it seems as the larger concern is that because there are no cues, everybody's probably assessing what 2023 is going to throw up in terms of cues, especially from the regulatory central bank angle. A lot of stocks in focus, which we will be discussing: Canfin Homes, RVNL, India Pesticides, Jubilant Pharmova. Let's in fact start the show with India Pesticides, which is up around 7 to 8% in what is a quiet market. Sonal, tell us more.
Well, yes, the company has gone ahead and reported to the exchanges that their wholly owned subsidiary, that is Shalvis Specialties, has received an environmental clearance, and this is for one of their projects which they will be commissioning. So here the company says this manufacturing plant will be for manufacturing of agrochemicals and intermediates, API ingredients and intermediates, and also fine chemicals and manufacturing unit. They have not given us the capacity here, so difficult to assess what kind of utilization or turnover there would be. But back in 2021, company had made further investments in this subsidiary, where the proposed project was worth around 250 crore rupees. This is in the state of Uttar Pradesh, and production at the plant was expected to begin in next 5 years. Now that the clearance is coming sooner than expected, the production could actually start earlier than what the company was anticipating, and that's why maybe the excitement in the stock today as well. The stock is up 16% this week as well, and we spoke to the company just a few days back where they did sound very optimistic. They said that they will see an improvement in margin in FY24 versus FY23. Exports will increase by 40% in FY23, and they expect growth of 30% in FY23 and around 25% growth in FY24. So good prospects. They have some capacities coming on stream as well, and that's why so much excitement in the stock today as well.
All right, that's about India Pesticides, but RVNL is the other stock which is buzzing in trade today. Remember, this has been a big mover in the past, but the last week saw a bit of a decline alongside all the other stocks which fell. Now it is on account of an order that it has received. Vivek?
Well, absolutely right. So, Rail Vikas Nigam Limited, this particular company has been the beneficiary of very strong increase as far as, railway capex is concerned, and it has got continuous order wins. Now, along with that, if you remember, the management recently came to a channel and they said that they have a very strong order pipeline for the second half of FY23, and in fact, they said they're targeting over 1 lakh crore. So, what is the news today that we are tracking? The company said that it has received the LOA for appointment as project implementation agency for implementation of a harbour project, and this is for the Indo-Maldives project is the one that they're talking about. It is a strategic project of the government of India, and the project cost is quite sizable. A little over 1,500 crores is the kind of opportunity that RVNL is looking at. The project is going to be executed in the next 24 months, and the Ministry of External Affairs is the awarding entity for this particular project.
Okay, all right, Vivek, thank you so much for joining us with all those details. The stock is higher by 5%. Talking about Canara Bank now, had a decent run this year, up over 50%. And today also the stock has been buzzing in trade. Earlier today, we spoke to LV Prabhakar, who's the Managing Director and Chief Executive Officer at Canara Bank, and he informed that Canfin Homes will get a new CEO before this fiscal end. Listen in.
The MD CEO will be assuming the charge maybe before this financial year, and he will be from the industry and he will be from the same financial sector. So we have no doubt about the performance of the Canfin Homes, and the attrition which we are seeing is common. And I see a lot of valuations in my subsidiaries. Going forward, I'll get at least 5 to 6x times what I'm going to get today. And financial year 23-24, I think it will be a very good year for the financial sector, especially for the banks, and I am more bullish on the public sector banks. Credit, September you have seen Canara Bank has grown at 20% YoY growth in credit. Now coming to the liability side. 7th October, I have increased the retail term deposit rate to 7% for general public, 7.5% for the senior citizens, when the market rate was only 6%, 5.8%. In 3 weeks, we have garnered huge amount of retail term deposits under 666 scheme, that is 660-day scheme, and also 1 year, 1.5 years, 5 years.
Okay, so that's on Canara Bank. Just to put it into perspective, you know, Canfin Homes has been quite an underperformer this year. It's down around 4% or close to 5% on a year-to-date basis. But Canara Bank has just gone from strength to strength. In fact, it's up close to around 60% on a year-to-date basis. So just look at the divergence in terms of the performance for both those stocks. But let's move on then. Chalet Hotels is buzzing in trade. This is on the back of a brokerage note. Manglam is here to tell us more. Manglam, tell us.
Well, you know, towards the end of the year, we usually see a lot of hotel stocks move around. And this time around, there's a brokerage note initiation coming in from Prabhudas Leeladhar on Chalet Hotels. Remember, this is a Raheja Group company which also runs hotels, you know, under the brands of JW, Marriott, Westin, etc. Best place to ride the industry upcycle is what PL believes this company has, because it's got a strategically located metro-centric hotel portfolio, which of course is usually better for unit economics of the hotel industry. They have requisite pricing power amid affiliation with the marquee global brands, the names that I just mentioned, and they expect revenue and profit compounding of anywhere between 19 to 68% between FY23 and FY25. So revenue to profit compounding of 19% on revenue, 68% on the profit tells you about the operating leverage of the company itself. As a result of which, they have a target price of 455 rupees, which is about 100 rupees higher than where the stock price is currently.
All right, that's about Chalet Hotels. All the stocks that have been in focus today. But with that, we'll slip into a short break. On the other side, we'll connect with Shikhar Agrawal of VLS International Services for a chart on demand trends and the outlook for the next year as well. Stay tuned.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, as we draw to a close on 2022, Pavitra looks at 3 categories of funds that manage the most amount of money. How have actively managed funds fared this year? How does the performance look if we expand the time frame? Pavitra Parekh is standing by with the data.
As we wind down in this year, we thought it would be really interesting to look at how mutual funds have performed versus the benchmark. So let's now talk about the performance of large, mid and flexi cap funds today. This is all data from Morningstar, and I'm going to start with the large cap category. On your screen now is the 1-year performance of the top 10 largest large cap funds. The benchmark return for this period is around 11%. And now let's compare how all of these funds have fared versus the benchmark. The best, like you can see on your screen, is the Nippon Fund. It has a return of nearly 17%. HDFC is a close second. And then you have the ICICI Pru Fund, which has clocked in a return of around 12.5%. Apart from these, none of them have managed to beat the index. So let's not stop at just a 1-year return. Let's actually zoom out and take a look at 3-year and 5-year returns as well. And unfortunately, things don't look much better when you do that. A scorecard for the large cap funds will show you that for a 1-year period, only 4 of the 28 managed to beat the index. Remember, 3 of these are already the funds that we spoke about from the top 10 largest fund list. This is what I showed you in the previous slide. In terms of 3-year returns, only 2 of the top 10 and 4 of the total 26 managed to beat the benchmark. And then if you want to move out even further, you will see that he had only 1 of the top 10 and also 1 of all 25 that could beat the benchmark over a 5-year period. So this is a complete recap on how the large cap funds did. But let's now move on and talk about the mid cap funds as well. This is the top 10 largest mid cap funds and the 1-year return. The benchmark for this period came in at 8.74% and only 4 of the top 10 funds by size managed to beat that. HDFC did the best, like you can see. It clocked in a return of 16%. This was followed by Nippon at 11%. And then you had Sundaram with a little over 9%. Let's also bring the scorecard up for you. And there you'll see that 4 of the top 10 and 8 of the total 25 could beat the benchmark. This is for a 1-year period. If I look at the 3-year annualized returns, you will see 3 of the top 10 and 5 of all 23 which could come in above the benchmark return rate. And for a 5-year time frame, we saw 4 of the top 10 and 8 of the total 21 managing to beat that benchmark figure. Lastly, we have the flexi cap category, and all of those funds will be on your screen as well. The top 10 largest are once again on your screen. The benchmark return is 10.2%. So let's see how it stacks up. The best performing fund in this category has been the HDFC Flexi Cap Fund. This one actually saw a really solid return, 24% for 1 year. But you know, this is quite an outlier, because if you take a look at all of the rest after that, they don't look nearly as good, right? So the scorecard will show you that things aren't much better even when you expand the time frame and take a look at that. So for a 1-year period, only 3 could beat it from the top 10 list, and from the total 28, only 5 managed to return, which was higher than the benchmark. Looking at the 3-year annualized returns, 3 of the top 10 and 6 of all 24 managed to beat the benchmark. And lastly, for a 5-year period, we had 4 of the top 10 and 7 of the total 21 which clocked in a return which was higher than the benchmark. So that is a recap of how large cap, mid cap as well as flexi cap funds have done. And while we have been talking about, you know, equity flows being good, SIPs picking up month after month, it is important to highlight that fund managers have found it quite hard to beat the benchmark, at least in these 3 largest categories that I highlighted by size.
All right, Pavitra, hard to beat the benchmark is the conclusion from that in the MF space, which explains perhaps the rise of passive funds as well and people investing in ETFs. With that, we'll zip into a short break. On the other side, we'll talk about Reliance Industries. It's a landmark journey under the leadership of Mukesh Ambani over the past 2 decades. Stay tuned.
Welcome back. You're still tuned into Halftime Report here on CNBC-TV18. Well, markets, they continue to do well. It's an 11-point uptick on Nifty, sharp recovery from the lows. But this year really marks 20 years since Mukesh Ambani took over the reins at Reliance Industries and the transformation of the oil to telecom giant under his leadership. Sonia Shenoy is standing by the big wall to walk us through Reliance's landmark journey under the leadership of Mr. Ambani over the last 2 decades.
Well, the year 2022 marks 2 decades of Mukesh Ambani's leadership at Reliance Industries. We take you through his journey and the exponential growth the group has seen over the last 2 decades. Let's throw it way back to July 2002 when 45-year-old Mukesh Ambani took over Reliance Industries after the demise of his father, late Shri Dhirubhai Ambani. Since then, Reliance has achieved consistent and strong double-digit growth. The market capitalization of Reliance rose at an annualized rate of 20.6% in the last 20 years, rising from almost 50,000 crores in March 2002 all the way to 17.81 lakh crores in March of 2022. In fact, we've put together a table of the key financial parameters and how most metrics have seen high teens growth in the last 2 decades. If you look at the revenue and the net profit itself, they've risen 15 to 16% on an annualized basis over the last 20 years. Not just that, exports, assets, net worth have all gone up in excess of about 15% and almost 20% on asset growth for the last 20 years for the group. Well, the gains are not for the group to enjoy alone. Reliance has successfully and consistently generated wealth for investors. Reliance added 17.5 lakh crores to investor wealth in just the last 2 decades, adding an average of 87,000 crores to investor wealth every single year. Also, Reliance has displayed agility and relevance by investing in new and upcoming businesses. Reliance's E&P business made its first hydrocarbon discovery way back in 2002, and production started in 2009. After that, Reliance Retail started its operations as well. And in 2016, the big breakthrough came in when Reliance entered the highly competitive telecom industry. Reliance Jio started operations in 2016, and this led to the cost of data per GB falling from 500 rupees in India to 12 rupees post the launch of Jio. Not just that, India's ranking in broadband data consumption as well moved from 50 in 2016 to number 1 in 2018. And this at a time when the traditional refining and petchem business expansion continued. So from a single refinery in 2002, Jamnagar is now the world's largest single location refining complex. In fact, Reliance has added some of the world's largest downstream units as well, setting up the world's largest refinery off-gas cracker at Jamnagar and added the world's largest petcoke gasification unit. The last 2 decades have been full of milestones for Reliance, but now let's look ahead into the future. Reliance is committed to investing 75,000 crores in the next 3 years in its new energy businesses and aims to become the world's lowest cost producer of solar energy and green hydrogen. Reliance will be setting up 5 integrated gigafactories at Jamnagar to emerge as the world's lowest cost producer both of solar energy and green hydrogen, and the plan is to become net carbon neutral by 2035. Not just that, Reliance will start 10 gigawatts of solar PV cell and module factory. That happens in 2024, and that will be scaled up to 20 gigawatts by 2026. Remember, it was also under the leadership of Mukesh Ambani that Reliance set a record of capital fundraising way back in FY21. It raised more than 2.5 lakh crores through rights issue and minority stake sales in Jio platform and Reliance Retail Ventures to global marquee investors. During FY21, Reliance was the single largest FDI generator for India at a time when most companies were struggling to survive. Finally, let's wrap this up with Reliance Industries' commitment to corporate social responsibility. The Reliance Foundation was set up way back in 2010 with Nita Ambani at the helm, and it has so far touched more than 6.3 crore lives and is India's biggest CSR initiative both by reach and by spend.
Thanks a lot for that, Sonia. Remarkable story of remarkable leadership. 2 decades, 20% plus compounding for the Reliance market cap. With that, we'll step into a short break. Come back on the other side. We'll connect, as promised, with the management of BLS International Services.
India, smarter deals, brighter futures.
Welcome back. You're watching us here on Halftime Report. Let's talk about some travel. And for travel internationally, you do need visas, etc. BLS International Services is the stock in focus. The stock has gained nearly 270% in this year, currently under a bit of pressure. But remember, last week itself, it hit $1 billion in market cap, a beneficiary of the recent trend of revenge travel. To discuss whether this positive momentum continues into 2023 or not, we have Shikhar Agarwal, who's the Joint Managing Director of the company, joining in. Shikhar, thank you for joining in. Always a pleasure speaking with you. Do you think revenge travel has really peaked out now and inflation will begin to hurt customers? And also long wait times for visas, will that hurt people as well? Because, I mean, first half, your processing volumes are up 70%, your revenues are up 70%. Do you think this momentum continues?
Definitely. As you know, in Q2, we are, more than 80% up in revenue, and PAT we have declared at 50 crores, which is also growth of 80% compared to last year, same quarter. Definitely, after COVID has, opened, things have opened up, revenge travel has picked up. People are really eager to travel. And definitely we see this momentum continuing. Over the last end of the year, definitely in certain countries, there is different travel demand. There is less travel demand from certain countries, whereas there is an increase, for example, for Indian visas during this month. So definitely we see the momentum continuing in the next year itself. And as you know, BLS International now is present in 64 countries, and we have processed 62 million applications till date.
Shikhar, if you just go to the airport, you'll get an idea in terms of what revenge travel is looking like these days. But, when you say momentum is expected to continue, countries such as China as well as Russia were largely out of the loop this year. Give us a sense in terms of what you're expecting in terms of numbers when you say visa processing going into next year. Is this 70% probably going to be maintained? Are you going to come down to 50%? What are the trends looking like, even if you throw China and Russia into the mix?
See, whatever numbers that we did this year was with minimal numbers coming from China and Russia. And, that itself has led to a 60 to 70% of the total visa volumes that we've achieved. So next year itself, we want to, we think that we will maintain that volume. And if there is an addition from China and Russia, which is expected, then definitely there will be an increase in volumes. On top of that, the new contracts that are up for, decision making, and the new contracts that we have won this year itself, which is the German, Thailand, and different other governments, will definitely add to our volumes and revenue and PAT numbers.
Okay. While you're talking about an increase in volumes, and I would get to the specific or at least a range of growth that you're expecting there with new additions there, 20 to 30% higher in terms of revenue per application as well. Do you expect that will also go up considering that volumes are going up?
See, definitely the revenue that we have achieved now per application is higher than what we were doing pre-COVID level. We are definitely trying to increase that revenue per application. I don't know the exact percentage, how much it will go up, but definitely it will go up.
Okay.
Right. Could you give us a sense of the other parts of your business? I mean, e-governance and B2C business, you said would be about 18% of your revenues. You wanted to increase the share of this business going forward as well. How much do you think that could be by the end of this year, and more importantly next year?
See, as you know, recently we did an acquisition for a company called Zero Mass Private Limited, which is a 100 crore odd acquisition. With that, now we have become the largest banking correspondent player for State Bank of India within India. Now, we have combined the entire e-governance and banking correspondent business into a segment called digital business, because now this will require new focus and new momentum for the company. So we have new management, new CEO for this division who is going to head that for us. And we see over the next few years, the growth in both digital business and visa business. So the percentage of revenue split will maintain in both segments of our business.
Okay, so you did around 18% of sales in Q2 from digital services and obviously 80% from visa. That revenue will, the breakup will be maintained going into next year?
Correct, because as you see that we have also won a lot of new contracts in e-governance business, like from the West Bengal government, Karnataka government, and also we have won a lot of contracts in the visa business. So definitely we see a growth in both the revenues and the percentage of split to be maintained in over the years.
Okay, so the percentage split will continue to be maintained in this proportion. 20% margins in FY18, of course, you're talking about pre-COVID levels here. Now, when we are seeing more travel opening up, more destinations opening up, some volumes coming in from Russia and China as well, what kind of margins are you expecting, say, in FY24? 12.6% is what you did in FY22. Will you be able to do better than that? And better would mean by how many basis points here?
See, definitely now, post-COVID, the consumer demand has changed. The consumer has demanding different kind of services like mobile biometrics and different kind of services wherein they don't want to come to the center to get their application back. So that has definitely led to an increase in revenue and margin for our company. Going forward, we definitely see an uprise by more than 1 to 2% over the years in the profitability of the company with introduction of more different category of services.
Right. Finally, before we let you go, Shikhar, just leave us with some, thoughts on how much are value-added services as a proportion of your overall revenue, and secondly, is there any other, renewal coming in terms of visa services?
Correct. So value-added services as a whole is 25 to 30%, 25% of the entire revenue. And as you know, in this industry, there are opportunity of $1.5 to $2 billion worth of tenders from different governments that are coming up for renewal, and we are in different stages of tendering. So as and when we are, declared as a winner, we will be announcing to the market, but that will definitely lead to a huge rise in revenue and profitability of the company further from whatever we have achieved in last quarter.
Okay, just quickly, Shikhar, before we let you go, you did make an acquisition. You spoke about that. You have mentioned that y'all are net debt free and y'all have high free cash flows, which y'all generate as well. So what is the outlook on any kind of inorganic expansion beyond, if you can guide us and leave us with that?
definitely, as you have seen that over the last few years, you've already done 2 acquisitions, and we are getting good return on our investment. So we are looking at acquisitions in similar lines of business, both in e-governance and in visa outsourcing, where there are 1 or 2 companies globally that are interested in sale, and we are in talks. So as and when the due diligence is completed, when the sale is announced, we will be definitely letting the market know.
Any kitty for acquisition? Any amount that you've set aside that, yes, this is what we'll invest for acquisition?
See, right now, the amount of money that we have on the books, we are definitely looking at acquisition from that amount. So right now, we have not taken any debt even for the recent acquisition. So that is what we wish to maintain as of now.
And of the 62 million applications, how much of them were done in this year?
This is all 31st March 2022 data.
And in this year, how many applications have you serviced?
I think I need to check the exact numbers, but probably around 6 to 7 million we must have done already.
Okay, and Shikhar, I just want to wrap up this conversation by asking you, which is probably the most popular destination for this year in terms of visas?
No, I feel in terms of Schengen clients, we have definitely seen Spain as really upcoming as a very, very fast-growing Schengen destination. If you see going to Spain, the cost of traveling, the hotels, everything is quite competitive in terms of Europe and the climate. So we have definitely seen a very big boost from Spain coming up this year.
Okay, interesting. Makes us all here in the studio want to travel. Shikhar, thank you so much for joining us, and have a great new year to you and everyone at BLS International as well. So that's the word coming in from BLS International. Definitely travel coming back with so much vengeance.
Yes, absolutely. And the delays in terms of getting visas, etc. Let's see how 2023 pans out. But nonetheless, we also have a depreciating rupee on our hands, so you have to take note of that. Time for a break now. Sudeep Shah of SBI Securities will join in with some trading calls. Stay tuned.
Cheers.
Welcome back. You're watching us here on Halftime Report. Even as the markets, shuffling between green and red, the underlying trend, you'd have to say, is better than what it was sometime last week because of the market breadth. In fact, on Monday, we saw that sharp rebound in the mid-cap index. Then we saw market breadth continue in favor of advances yesterday as well. And now as we speak, we have nearly 2 stocks advancing for every stock which is declining. It is the Nifty, which is mildly in the green right now, just about 6 odd points. The Nifty Bank as well, flat from the lows of today's trading session, up almost 58 points as we speak. And because it is expiry, a lot of people are perhaps looking at a range-bound trade, primarily on account of with a view to perhaps go ahead and eat the premium that is available. Where is the Nifty at right now? The closest round figure strike is 18,100, and that's where we're seeing a fair amount of action. The 18,100 call continues to see open interest build up, close to around 20 lakh shares added in open interest on that one with a premium of 92 odd rupees. And the 18,100 put as well is extremely active as we speak, almost 61 lakh shares written for a premium of 45 odd rupees. So what is the strategy that these writers are deploying? Combined premium in both the 18,100 call and a put, which is a straddle, is close to around 120 odd rupees. So they are eyeing a range of 17,980 to 18,220 for expiry. So dips towards 18,000 would be bought into, and moves around that 18,200 and a little over 18,150 may see some bit of selling. Why is 18,220 important? Because it's also the 50-day moving average. So technically, it would be a bit of a congestion zone. In terms of stocks, the one stock I'm watching out for is Titan. It's done well all through this trading session, currently at the high point of trade. And it's seeing a lot of long positions being added, not only in this series, but the next series as well, primarily with a view to playing the pre-quarter update trend, which is why we're seeing some up move on Titan. Everyone's betting for the company to release a strong third quarter update, primarily because of the festive season and the wedding season as well.
Okay, all right, Mangalam. Thanks very much for that. Titan, in fact, is the top gainer on the Nifty this afternoon. Sudeep Shah of SBI Securities joins in to discuss the technicals of the market. Sudeep, hi, welcome to the show. Well, 18,220 is that next level, which will be marked quite closely on the Nifty. Like Mangalam mentioned, it is the 50-day moving average. How closely are you watching it, and what do you think is probably going to lead it higher if that's the case?
Yeah, good afternoon, Ekta. What we are seeing is that post that fall to 17,800 last week, we are on a pullback mode. The Nifty is on a pullback mode, and now key supports would be around 18,030, 18,050, with a fair amount of writing happening in 18,000 and 18,100 calls. Puts. So what we feel is that this pullback could continue up to 18,250, 18,300 zone, and there could be fair bit of resistance around this 20 EMA zone of 18,300. So this is where the next set of resistance is placed, and I feel that after a pullback, this 300, 400 point up move could end at 18,300, and then once again we could see at some kind of a consolidation between 18,000 and 18,300 in the next week. So overall, the support lies at 18,030, and the next resistance would be coming in around 18,280 to 18,300 zone, where the call writers are placed at 18,200 and 18,300 strikes.
And Sudeep, what would your individual technical picks be?
A couple of them. One is from the PSU banking space, and second one is from the metal space. Now, we've seen PSU bank index started to gain momentum in the last couple of trading sessions. They're the first ones to sustain above the 20 DEMA, and while the bank Nifty has gained 3.5%, PSU bank index has gained around 9 to 10% from the Friday's lows. So the top pick within the PSU banking space would be Bank of Baroda. In this stock, what we have seen is from October's 130-35 zone, there was a big move to 195. And post that, we have seen a correction to 170, 172 zone, which around it was the 10-20 day DEMA which is placed there. So once again, with the PSU bank index coming back into a positive momentum, we feel that this stock could do well in the next couple of sessions, and this can be bought with 178 stop loss and 193 as the probable targets. The second pick would be JSW Steel. Now, metal index we have seen is already in bullish momentum, closing. It's trading close to its lifetime highs, and it's just a couple of percentage away. A lot of metal stocks, JSW Steel, Jindal Steel, Hindalco, they are outperforming. So within that, we feel that the JSW Steel stock could do really well. The stock had been consolidating between 725 and 755 in the past 3 weeks, and yesterday we have seen a big breakout in that stock with a rise in open interest and volumes. Also, it is sustaining above its key short to medium term moving averages, and we feel that the current up move could go up to around 790, 795 levels with 745 as a stop loss.
Okay, Sudeep, thank you so much for joining us. So that's a technical check on the markets. Let's get stock specific again now. Page Industries is trading in the green today. MK has upgraded the stocks trading to a buy. Surbi is joining us with more details on that note. Surbi?
Hi, thanks for that. So Page Industries will be in focus today, and that is because MK has upgraded the rating to buy with a target price of 50,500. Now that gives it a potential upside of close to 15%. The stock has recently corrected 20% from its October peak levels. The company has been reporting moderate growth in the recent quarters, and that is mainly because of two reasons. One, inflation-led slowdown in consumption, and second, due to a high base last year because of the pent-up demand in COVID. MK believes that the top-line growth should revive by Q4 with the reversal of high base, delay in winters, and better supply chain management. Beyond this, they believe that the fundamentals of the business are in a better shape, and that investments in capex and distribution expansion, production innovation, and backward integration, all of this could help growth in the long term. They believe that the Page could deliver mid-teen EPS CAGR in the next 2 years, and they're valuing it at 58 times FY25 EPS versus 59 times December 24 EPS earlier.
Okay, expensive stock there. Thanks, Surbi, for that. Well, the other stock that we are tracking on the back of a brokerage note is Jubilant Pharmova. Nirmal Bang did meet the management. A couple of key important takeaways. Let's start with the radiopharma business, which is basically nuclear medicine. They have said that it is back to pre-COVID-19 levels. It is expected to grow in double digits for FY24, and the growth is expected to be via new launches as well as the ramp up of RubyFill. Now, RubyFill is basically used for PET scans. The allergy business that they have, and to put it into perspective, they are the sole producer of venom extract products for allergies in the US market. We are expecting double-digit growth as well as healthy margins. Generic business faces headwinds on account of pricing pressure. Margins are expected to improve Q-on-Q with product realizations as well as new launches. The CDMO, which is contract drug manufacturing for sterile injectables, they expect double-digit growth FY24 on the back of a strong order book as well as capacity addition. Nirmal Bang has a buy with a target price of 432 rupees on that particular counter.
Okay, that is about Jubilant Pharmova. The stock is in focus, but time for a break now. On the other side, we'll talk commodities. Manisha Gupta will join in with Kishore Narne of Motilal Oswal Commodity Broker. Stay tuned.
Welcome back. Joining us on the show now is Kishore Narne from Motilal Oswal. Kishore, hi, good to have you. And even as there are just a couple of days remaining for the year to end, we continue to see a lot of choppiness in the metal space or as a sector. We've seen copper prices inch back towards those $3.9 per pound levels in the New York session yesterday. China reopening clearly is a big trigger there. How do you see the metal prices, especially copper, continue to trade in the days to come?
Morning, Manisha. I think, see, the entire base metal pack is fundamentally strong because of the demand-led price rise. The only thing which actually curtailed them over the last couple of months before the current rise was that China struggling through the COVID cases and lockdowns, etc., containing their demand. And before that, the shipping issues and logistic-related issues which curtailed a lot of demand on that. So now both of these issues solving and easing a bit, the prices are expected to go up because fundamentally there are two factors which will drive. Number one is dollar should weaken a bit coming in 23 and towards 24 as the interest rates peak out and the yields will start coming down. So that will make commodities to rally from there. Second is the supply side issues of metals. Number one is the inventory set at a multi-year low, multi-decade low in many of these things. Especially in case of zinc, it's almost like a century low. Actually, it's a 100-year low. Hardly we have around 36,500 tons of zinc in the warehouses. Even Shanghai levels are significantly low. And the third is the most significant one. Also, is that some of the mining contracts, the labor contracts are getting to the renegotiation levels this year. So first quarter of 23, you'll see a lot of strikes and labor negotiations going on in South American mines, Australian mines. Okay. So that will actually cause some supply disruption. So keeping all these in mind, the trend is going to be bullish. Maybe some short-term volatility could come. China is opening up. And I think prices are expected to go up in most of the metals. The top picks for me would be copper and zinc, maybe nickel, but nickel I'm putting it to the last because still the volumes of nickel are not very attractive to trade. All right.
Kishore, you did not mention aluminum at all, and there is power rationing, as we understand, in Europe, in China as well. And if you look at Europe itself, 2.1% of global output is curbed as of now because of that. Is there any concern at all?
Yes, it is actually. So aluminum has been a primary concern because of the electricity prices and the smelting capacity has been not there. But you also know that aluminum stocks or inventories are relatively better off. And they are very widespread globally across the countries. The inventories are there. And the automobile production actually slowed down because of the lack of chips. And the semiconductors. So that is actually also curtailing some of the aluminum use. But if the chips availability increases and the automotive industry ramps up the production, probably that's where the aluminum perform. But I think as war in Ukraine is, I think the peak of that has gone down and probably we'll see some of the easing because today we've seen that Japan importing first shipment of oil from Russia. So some of these countries are opening up. Probably, I'm not saying the war will end, but there is a lot of discussion of talks going on. Putin is open to discussion. So somewhere we will conclude in the next 4 or 5 months in that capacity. So I don't want to go and bet on that.
Okay.
Because most of these things are discounted in the market.
So, this year was divided into two because first half saw all-time highs, multi-year highs, and the second half, even as we've seen some bit of gains, is still on the weaker side as we close this year. Do you see the next year as well divided like that? I mean, the markets will clearly wait for China to actually reopen, the US Fed rate cycle to kind of peter out, ease out, finish. Are you looking at a second half better?
Yes, certainly. I think second half should be better. But I think markets tend to undermine or tend to discount the events much earlier before what happens. So in my view, I think third quarter or the last quarter of calendar year 23 is where we'll see the pause of interest rate hikes. And at that point of time, somewhere we might see the commentary toned down by the Fed. I'm not saying the Fed will turn dovish, but I think the ultra hawkish policy will smoothen out, and China will be, I think, in the first quarter or by end of first quarter itself, China will be, I think, back to normal in business, and they'll be opening up. So I think that's a criteria. Probably second half or by the second quarter itself, the prices tend to catch a new momentum from there.
All right. So strength can continue in case of the metal prices. Watch out for copper, zinc, nickel, aluminum, as Kishore mentioned, all of those fundamentals that could impact the prices going forward. Kishore, as always, thank you so much for joining us with the sense of all of those metals. With that, that's all the time that we have on the show. Business Lunch after the break will take all the action forward.
Brought to you by LIC. Har Pal